Hello and welcome to another video in the education series with Kane Financial Group. Today we're going to be talking about market downturns, which all of us have experienced over the last 6 months. Long-term investors will experience a number of market downturns over the course of their lives, which can be triggered from everything from natural disasters, financial crisis, political turmoil, and even pandemics. So if you're investing for retirement or other long-term financial goals, you need to know how to weather a market correction without being thrown off track. Controlling our emotions is extremely important. So what type of downturns are we experiencing? You may hear a variety of terms used to describe market downturns. A drop in the average stock prices of 5%, but less than 10% is known as a pullback or a dip. A drop of at least 10% but less than 20% is called a correction. A drop of 20% or more is called a crash. I don't like the word crash, but that's what we use. Once prices return to the most recent high, we say the market has recovered. On average, crashes take longer to recover from corrections. Investors can't know for certain that a correction isn't a crash until it's over. For example, if stock prices drop by 14%, the trend could reverse course from there and return the market to its previous peak. On the other hand, prices could continue to fall, eventually dropping by 20%, resulting in a crash. So how should you invest in a market downturn? Stock markets are notoriously difficult to predict, which is why market timing is generally a bad idea. I've been doing this for 36 years, and I can tell you that market timing just does not work. For example, it might sound great to pull your money out at the top and redeploy it at the bottom, but when will those events occur? So what do? We employ a bucket strategy for our clients' assets. We look at short-term money, intermediate money, and long-term money. Short-term money could be cash. One of the things we like to have, if the client has it available, is 1 to 3 years cash, which has no market volatility whatsoever, which allows us to avoid market volatility. Intermediate buckets could be balanced assets, could be bonds, and long-term assets could be growth assets or value assets, and even our income guarantees. The most important thing is a solid financial plan helps keep human emotion out. The number one deterrent for long-term success is human emotion. So human emotion. Remember how the human brain works. The sense of loss is 2.5 times greater than the sense of gain. So if you think about it, our brains are wired to fail. So think of us not only as financial advisors, but emotional counselors to our clients. Historically, the best thing to do during a downturn has been to sit tight with those buckets and ride it out. That's because historically, corrections have always been followed by recoveries. And you can only benefit from the recovery if you're holding on to your investments. We recognize that keeping cool is easier said than done. At times, it can be helpful to tune out all the endless market coverage, which can fuel anxiety and lead to poor emotional decisions. Market downturns represent a great time to speak with us. Our team can offer a third-party perspective and put things into historical perspective and make certain your actions are aligned with your goals. If seeing your assets go into the red is truly causing you stress, you might have to lower your risk tolerance more than you originally believed. The team and I can help you reassess your asset allocation and potentially tweak it to better serve your needs. So market downturns are an unavoidable fact of long-term investing. And a sound financial plan, as we mentioned, takes them into account. If you've already got an investment plan that reflects your unique situation, then the best thing to do during a downturn, based on the historical performance of the market, is to remain committed to your plan. We here at Kane Financial Group, our team is ready to help you and answer any of your questions. So if you need something, please reach out to us. All the best.